Hi everyone. So due to the COVID-19 outbreak, we are unable to conduct a face-to-face class. So we are going to do e-learning. So this video, I'll be discussing on tutorial 8 for Financial and Accounting Framework 2. And before we begin, I would like to inform regarding the attendance. So in between this video, and also to ensure that you guys don't skip my video, I'll be asking 2 questions, okay, in between. And you guys are supposed to email me the answer along with your ID and your name. So your attendance will be based on the email that I receive. Okay, so let's start. So the question I'm going to ask for the attendance purposes is, what is the difference between payables and accruals? Okay, let's begin with the first question. So I assume all of you have read the question. Okay, so let's look at what is required. What's required is that statement of comprehensive income and profit and loss appropriation account for the year ended 31st December, partner's current account, statement of financial position. Okay, so for the first one, always start with the sales, right? So sales is directly obtained from the trial balance, less with cost of goods sold. Opening inventory is also provided in the trial balance, plus with the purchases directly from the trial balance. So opening inventory plus with the purchases 175,090, minus with the ending inventory from note number 1. Okay, you can refer to the question, note number 1. And then from sales minus with all the cost of goods sold, you get a gross profit of 46,622. And then we proceed with minusing off all the expenses. 27,400 of salary, that is, yes, from the trial balance directly. Office expenses, okay, there's a computation for office expenses. Let's look at the computation. Office expenses, why 2130 plus with 240? Is that because office expenses just owing 240? Okay, so office expense 2130 plus with the 240, where we will get, is it, okay, 2370. Discount allowed is also from the trial balance directly. Okay, look at the depreciation. Depreciation for a motor vehicle. So based on the question, let's look at the question. Provide for depreciation motor vehicle 25% of cost, office equipment 20% of cost. So let's look at the office equipment at cost 9,200 and motor vehicle at cost 21,400. So here is quite straightforward. 25% times with the cost, you will obtain 5350, and depreciation for office equipment 20% of the cost 1840. So from here we'll get the net profit. So from gross profit minus with the expenses, we'll get net profit of 9,350. Okay, so we are done with the first part, obtain the net profit. Now we'll move forward to the second part, which is the profit and loss appropriation account. Okay, the second part. So this part, whatever that is being added, okay, it is the revenue to the business, and whatever is being minus, it is the expenses of the business. So if let's say in the question, it's not applicable to this question, salary. If let's say salary is being paid to the partners, it will be minus out in this part. Okay, salary for partners. So again, whatever is being added is the revenue to the business, and whatever is being minus is an expense to the business. So interest on drawing 300 and 200 is given in the question. Okay, interest on business. Sorry, interest on drawing, meaning that when Juhi and Kajal withdraw money from the business, they are being charged with interest. So that interest that being charged is a revenue, additional revenue to the business. So that's why you add. Alright. Minusing out with the loan interest. Okay, so there's some computation over here. So let's look at how to derive with this computation. Note number 4. On 1st July 2012, it was agreed that 10,000 should be transferred from Juhi's capital account to a loan account bearing 8% interest per annum. However, no entries has been recorded in the accounts for the transfer. So meaning that initially Juhi's capital was 50,000. Alright, Juhi's capital was 50,000. 10,000 from Juhi's capital has been transferred as loan to the business. Okay, so when is it? 1st of July. Alright, so here to compute the loan interest, 8% was the interest rate, times with the 10,000 times is prorated 6/12. Why 6/12? Because started July to December is 6 months, so the interest is being prorated, that's why times 6/12, so you get 400. Okay, now moving forward, interest on capital, there's also a computation here. Initially, remember from the question, trial balance, Juhi's capital invested initially was 50,000. Okay, this rate is given in the question. You need to minus out the portion that was being removed from the capital to become loan. Okay, so 5% times with the portion that has been transferred as loan times with prorated with the duration 6/12. So you obtain 2250, meaning that the interest on capital, it's only the purely on the capital. It was the 10,000 that has been taken out from the capital to become loan has been excluded. Okay, so for Kajal, straightforward, 5% times with the 20,000, which is Kajal's capital invested. Okay, so the total net profit for this business is 6,200. Okay, so from the profit 6,200 which I have obtained earlier is being shared between Juhi and Kajal. So based on the question, Juhi has 70% entitled for 70% profit sharing and Kajal is 30%. So compute, and Juhi will have 4340 and Kajal 1860. So both of these total up, you need to have 6,200. So moving forward to partner's current account, the second part. So for partner's current account, whatever that is in the debit side, recorded in the debit side, is an expense to the partner, and whatever that's been in the credit side is a revenue to the partner. So basically, this partner's current account is in the view of the partner. Okay, so whatever that we have computed over here, interest on drawings, loan interest, interest on capital, will transfer to this part. Okay, will transfer to this part. So we need to also state the drawings here, the drawing that has been withdrawn by Juhi and Kajal. Okay, you can obtain this from the trial balance. Interest on drawing, which we have already is also given in the question. Interest on the capital, which we have computed earlier. Loan interest, also from computation earlier. Okay, and then the share of profit, record that, and then you need to compute what is the balance carry forward. Okay, so in this case, the balance carry forward is in the credit side, which means the expenses are more compared to the revenue. That's why the balance carry forward falls on credit side. Okay, next part, we shall move to the statement of financial position. Okay, so for office equipment costs minus with accumulated depreciation, you get a net book value. So how do we obtain this accumulated depreciation? Is that, look at the question. Accumulated depreciation, okay, was given, say for example, for motor vehicle is 12,800, and for office equipment 3,006. Okay, this is accumulated. So for that particular year, 25% of cost and office equipment 20% of cost. So you have to add the accumulated depreciation for that particular year into the accumulated depreciation which was being carried forward. Okay, so that's where you'll obtain 5440 and 18150. And then cost minus with the accumulated depreciation, you get a net book value. Current asset, inventory, account receivables, bank and cash, all these can be obtained from the trial balance as well. Balance from trial balance. Current liability, yeah, from the trial balance. So from here, we'll have 53,231. Asset minus current liability, 53,231. Non-current liability, which is the loan. Remember, the loan to the business was 10,000. Financed by capital. Juhi capital, it became 40,000 because 10,000, remember, it has been taken out as loan. So now Juhi's capital is 40,000. Kajal, 20,000. So total up capital from 40 and 20,000 is 60,000. And then the information on the current account, which was computed earlier. The balance carry forward from the current account is being reported here. Okay, so 60,000 plus this, the amount, balancing amount is 50,241. Right? So for the second question, what is the component of a complete financial statement? Email me the answer, yeah?